So for today, we are going to do another question under the published financial statements. That is November 2015, question 1. IS1. It covers International Accounting Standards 1, beside other standards which build that question. So, this is a relevant question. They are saying that Dora Limited, a quoted company dealing in household goods, has prepared the following trial balance as at 1st December 2014. We have the revenue, loan interest paid, purchases, distribution costs, administrative expenses, interim dividends paid, inventory, trade receivables and payables, cash and cash equivalent, ordinary shares, share premium, general reserve, retained earnings as at 1st January 2014, 4% loan payable 2024, land and building. We have the costs. You are given for land is 60, so meaning that for building would be 320. So the total value of the land and building is 380. We have accumulated depreciation at 64, plant and equipment cost being 258, accumulated depreciation 126. Investment property as at 1st January 2014 is given at 548. Rental income 48. Proceeds from sale of equipment at 7. Additional information number 1. Closing inventory as at 31st December 2014 amounted to 388 at cost. However, shortly after the year end, some inventory which cost shillings 15 million was sold for 8 million. Number 2, land and buildings were revalued on 1st January 2014 to shillings 800 million, including land at 100 million. The buildings have a remaining useful life of 40 years. The income tax liability in the year was estimated at shillings 20 million. Deferred tax was to be provided at 7 million. Number 4, during the year, the company sold some equipment which had cost shillings 15 million with accumulated depreciation as at 1st January 2014 of shillings 3 million. An item of plant was also estimated to be impaired by shillings 4 million during the year. Number 5, depreciation rates as per the company's policy are as follows. Building over the useful life period, plant and equipment, 20% reducing balance. The company's policy is to charge a full year depreciation in the year of an asset's purchase and none in the year of disposal. The company treats depreciation of the plant and equipment as a cost of sale and on land and buildings as an administrative expense. Number 6, Dora Limited values investment property at fair value. The fair value of the investment property as at 31st December 2014, as at 31st December 2014, was 586. Number 7, during the year, the company made a 143 bonus issue, capitalizing its general reserves. These transactions has not been accounted for. The examiner requires you to do what? Prepare in a format suitable for publication the following financial statements for Dora Limited for the year ended 31st December 2014. They need an income statement, statement of changes in equity, statement of financial position. Note to the financial statement are not required. Round off your figures to the nearest shillings in millions. You round off to the shillings in millions. That is 20 marks. That is 20 marks. 20 marks. So, what you're supposed to do in published, what you're supposed to do is all about the interpretation of the additional information. the interpretation of the additional information. So that is where we start from. So workings. So we have to start from the workings. We have to start from the workings. So starting from the workings, we interpret the additional information very fast, very fast. So the additional information, we start from additional information number one. So what you need to understand from additional information number one, they are testing you how you are supposed to account for the inventory. Inventory, closing inventory as at 31st December 2014 amounted to 388. Amounted to 388 at cost. However, shortly after the year end, some inventory which cost 15 was sold for 8. So you account for inventory using the International Accounting Standards 2, IS2. International Accounting Standards 2. So what does International Accounting Standards 2 talk about? Generally about inventory. What about inventory? From the scope of the term inventory, measurements of the inventories.
Mwalimu, I can't hear you.
You can't hear me? So what is it? Let me check. You cannot hear me? Anybody who is experiencing the same?
We can hear you.
So I don't know why.
We can hear you actually.
So whoever is not hearing, make sure that check your mic. So when we are talking about inventory, International Accounting Standards 2, what does it talk about? It talks about the scope of the term inventory. We talk about measurement of inventory, disclosure requirements. And this one has been tested somewhere in the past paper. That is November 2018, question 1. A question of how many marks? Because under the scope, they were talking about 2, measurement 3, disclosure 4. So that is 7. 5 plus 4, 9. So what about the scope of the term inventory? What does inventory include? What does inventory include? These are the copy, you have it. They are the copy I am reading from my end. They are the copy I have here, you have it. So we always say that, I can share it to the group as we continue so that you understand what I'm talking about. So there's a picture I've shared to your group. On how you are supposed to measure inventory, the scope of inventory, and the disclosure requirements. So I will be interpreting about that. I will be talking a bit about what I've shared to the group as we do the workings number 1. I think you have seen what I've shared to the group. So when we talk about the scope of the term inventory, what does the inventory mean? Inventory includes the asset held for sale, what you hold to sell as an entity in the ordinary course of the business. That is the finished goods. So in a business setup, so you have the finished goods to dispose. So the scope of the term inventory first represents finished goods. Other than the finished goods, the assets in the production process for sale in the ordinary course of the business. So that is the work in progress. Other than the finished goods, we have the work in progress and the material and supplies that are consumed in production. So we start from the materials, work in progress, then finished goods. That is what the scope, the term inventory means. So when you are asked about the scope of the term inventory, it's not about the goods consumed in the production process, the work in progress, and the finished goods. And now, when we move to the measurement, that is where now I will be applying my working number one from. So we measure inventory at the lower of cost and net realizable value. Let me admit other members while still waiting. So I always say that we measure inventory at the lower of cost and the net realizable value. At the lower, you check the cost and the net realizable value, you compare the two, the lower. So that is what I have shared is talking about. You can read and see. Inventory are required to be stated at the lower of cost and the net realizable value. So cost should include cost of purchase, like now transport, handling, tax. So cost of conversion. So cost, it includes cost of purchase, cost of conversion, and other costs incurred in bringing the inventory to their present location and condition. Inventory cost should not include abnormal waste, storage cost, administrative overheads, selling cost, and similar costs. Then you can read and see the disclosure requirements of the term inventory. So we talk about accounting policy for inventory, carrying amounts. Then we have amount of any reversal of a write down to net the realizable value and the circumstances that led to the reversal, carrying amount of inventory pledged as security, cost of inventory recognized as an expense. So for our question, I was concerned with the measurement, the working number one. So they have said that there's a cost, then we need to check for net realizable value because they did a disposal. So yeah, they have provided us with a cost of 388. However, shortly after the year end, some inventory which cost 15 was sold at 8. So meaning that there's a disposal which was done at a loss. So here, there's a cost. So the cost is 388. So I would be looking for net realizable value from the same goods, net realizable value. So there were some goods of 15 which were disposed at 8, meaning that they were disposed at a loss of 7. So to get the net realizable value, you will take the cost 388 minus the loss of 7. That is 381. So the law of the two is all about 381. And this one will be my closing stock. That one will be my closing stock. We are done with working number one. Working two. Land and buildings were revalued on 1st January 2014 to 800 million, including, that is in brackets, including land at 100 million. The building have a remaining useful life of 40 years. So there's a revaluation of land and building. So I need to check if there's a revaluation gain or loss. If there's a revaluation gain or loss of land and building. So we always start with the revalued amount. the revalued amount. So the revalued amount is what is given in the additional information. Land is 100. The total for both was 800, meaning that building is 700. So then you compare with the net book value. You compare with the net book value of these assets. So land is obviously stated at what? Cost. And you were given in the trial balance the cost of land at 60. So what about building? You have to deduct accumulated what? Depreciation from the cost. Since we were told that land and building, the total is 380 and the cost of land is 60, meaning that building would be 320. 380 minus 60 is 320. So minus now the depreciation, the accumulated depreciation, which is given in that trial balance. After the land and buildings, there is an accumulated depreciation of 64. There's an accumulated depreciation of 64. So meaning that if you take 320 minus 64, 320 minus 64, minus 64. So 320 minus 64, that is 256. So you can see the revaluation is upwards from 60 to 100 to 56 to 700. So that is a revaluation gain of 40. 700 minus 256 is 444. So total revaluation gain is all about 484. That is 484. So after revaluation, obviously, you will be told that the asset, that is the building, will have a certain remaining useful life, meaning that they need you to compute for depreciation over the useful life. And that is what you are told in note 2. There are sentence. They said that the building have a remaining useful life of 40 years. So the building depreciation, depreciation on building over the useful life, and that is a straight line method of depreciating building, or a straight line method over the useful life. So after evaluation, it was stated at 700. It was stated at 700. So meaning that 700 divided by 25, what do we have? 700 divided by 25, that is 20, it was 25 or what? 40 years, sorry, I don't know why I'm saying 25. So this is 40 years. The remaining life is 40 years, not 25. So this is 17.5. So this is an expense. I will check where to classify if they said. If they never said where to classify, automatically this one goes to the cost of sales. Or in some scenarios, you will find other books, they have classified it under the mean. That is again okay. So you cannot be penalized for doing that. Note 3, the income tax liability in the year was estimated at 20. Deferred tax to be provided was 7. That is more direct because you are given the income tax and deferred, just add. It's unlike the previous one. I think you can be able to identify the difference. Number 4, during the year, the company sold some equipment which cost 15, with accumulated depreciation as at 1st January 2014 of 3 million. So once you see a disposal of non-current assets, you do a disposal account. So working 3, you can do disposal account. So disposal account is very easy, whereby you debit costs of the asset disposed, you minus accumulated depreciation of the asset disposed, sales proceeds, you credit sales proceeds, of the asset disposed. Right now here, the cost of the asset disposed was 15, that is not 4. Accumulated depreciation is 3. Proceeds, remember it's an equipment. So the proceeds, it's in the trial balance, the last item in the trial balance. You can see there are proceeds from sale of equipment, 7. So meaning that they made a loss. So yeah, they made a loss. For us to have a balancing figure, it means that this must be 15, this must be 15. So 15 minus accumulated depreciation minus sales proceeds, they never realized more than the cost of the asset. They realized the rest. So meaning that they made a loss of 5. They made a loss of 5. Then there's a plant which is estimated to be impaired by 4. That one will be put into consideration later when I will be classifying my expenses, and at the same time when I will be looking for the net book values of the relevant non-current assets. That is the plant and equipment. Yeah. So number 5, depreciation rates as per the company's policy are as follows. Building over the useful life period, we have already done that. Plant and equipment, 20% reducing balance method. So depreciation on the plant and equipment. Reducing balance. So reducing, we have to check the cost. We deduct accumulated depreciation. We have to take the cost minus accumulated depreciation. Then we multiply with the rate. But now first, remember there was a plant which was disposed. This one. This was an equipment. This was an equipment which was disposed. So before I apply my formula, I need to get the correct cost after disposal. I need to get the correct cost after disposal and the relevant accumulated depreciation. So the plant and equipment from the trial balance, it was treated at 258. That is the cost. Accumulated depreciation being 126. But here now we have the same equipment which was disposed. This equipment was inclusive on the one which is in the trial balance, meaning that I have to minus the disposal, that is 15, and accumulated depreciation of 3, so that I get my cost and accumulated depreciation after disposal. 258 minus 15, 243. This is 123. So that now I can now say cost minus accumulated depreciation. Then the answer I get here, which is 120, I multiply with my depreciation rate to get depreciation for the year. To get the depreciation for the year, I will take the depreciation rate, which we were told is 20% of the 120 now, after minusing the accumulated depreciation from the cost. And that one will be 24. And I can even decide to get the net book value of this plant and equipment by minusing depreciation for the year, which we have determined. And remember, there was impairment, we were told, which was there in note 4. The last sentence, they said an item of plant was also estimated to be impaired by 4 during the year. So we have to minus. So I'm killing many birds with one stone. So 120 minus 24 minus 4. So that is 92. This is net book value. So already for depreciation, I was looking for this, but I went ahead to do even for the net book value, to compute even for the net book value. Then the next additional information is additional information number. As I adjust something here. Remember that. So I think you have understood on how we have arrived at this. On how we have arrived at that. So the next addition information is addition information number 6. The addition information number 6. So that is fine. Everything now is okay. Because in addition information number 5, what they say the information which is down there, the company's accounting policy is to charge full year depreciation in the year of an asset purchase and none in the year of disposal. That is fine. The company treats depreciation of plant and equipment as a cost of sale. Now they are becoming specific, and land and buildings as an administrative. So just a minute, there's one student calling. So after that, because I've said for expenses they are specific, that depreciation for plant and equipment goes to the cost of sales, land and buildings goes to admin. Note 6, DORA values investment property at fair value. The fair value of investment property as at 31st December 2014 was 586. So you check if there's a gain of that investment property, because from the trial balance we have 548. It has increased to 586 after they did a valuation, because that is why we have a fair value of the investment property. It has increased from 548 to 586. So that is an income which would appear in the income statement. The difference, that is, the difference would appear in the income statement as an income. Number 7, during the year, the company made a 143 bonus issue. A bonus is whereby the company decides to issue shares to the existing shareholders at no consideration. That is for free. That is, there's nothing they will get in return. The company will get nothing in return based on the shares they issued, based on the proportion of the shares held by the shareholders of the relevant entity. So we will determine this transaction had not been accounted for. So the bonus issue, so that is working for. So the bonus was issued on a certain proportion, that is 143. So meaning that for every 3 shares they have, they are given 1 for free. For every 3 shares the shareholders have. So if you go to your trial balance, the share capital there is, the ordinary share capital, the value is 100. The value is 100. Each share was issued at 10, meaning that they issued how many shares? 10 million shares. So the shareholders are holding 10 million shares. So how many shares they issued through bonus? We cross multiply 10 times 1/3. That is 3 points.
Excuse me, can you do that again?
Who is having a question?
It's me. Can you kindly repeat that bit about from their ordinary share capital?
So see, it's not a bonus, it's shares the companies issue to the existing shareholders based on the shares they hold by that time, by the end of that year. How many shares the shareholders are holding? Kampuni ilikuwa imeissue shares ngapi? Ili ujue shares kampuni zenye imeissue, unaenda kwa capital account. The capital account is 100. Per share they were issuing at 10. So to get the number of shares, you take 100 divided by 10, you get 10. So now we need to know the shares they issued through bonus. For every 3 shares that the shareholders have, they are given 1 for free. So, and how many shares does the shareholders have? 10, because we took 100 divided by 10. So we close multiply and get the number of shares the company issued through bonus. That is 3.3. But these are shares. I cannot be using shares when doing my equation. I need the value. So per share is all about shillings 10. So that is 33. So the bonus issue they made is of 33 million. So after doing that, we classify expenses based on the functional heads. So classification of expenses are based on cost of sales, admin, I don't have to write in full, and we have distribution. For our finance, I will do it direct in the statement. That is in the statement of profit and loss. So we start from the balances as per trial balance. Balances as per the trial balance. So the balances as per the trial balance. So are you provided with the cost of sales? Are you given the cost of sales? If you are not given the block figure, you do it. You know that what you have to do. Cost of sales is equal to what? Opening stock. Opening stock was, if you check from the trial balance, there's an inventory as at 1st January 2014, which is 444, 444. We had purchases. Purchases again is in the trial balance and it totals to 1669, if I'm not wrong. Whereas the closing stock. Closing stock, we did it in working number 1. The lower of cost and the net realizable value, we got 3 to 1. So the block figure for the cost of sales is 444 plus 1669 minus 3 to 1, 1732. That is what you record here. Admin 345 from the trial balance. Then this is 514. So those are the balances from the trial balance. I will come back to this workings and check any expense to be classified under cost of sales, admin, and the distribution. The expenses we have here is depreciation on building. So we have 2 depreciations. There's that of a building. There's that of plant and equipment. And they were very specific that in note 5, the paragraph which is down there, there are sentence that is in note 5, that depreciation on plant and equipment goes to cost of sales. Then the other one goes to admin. So the one for plant and equipment was 24. And this one is 17.5. And these other expenses like loss on disposal. Loss on disposal of the plant and equipment, that is equipment. So loss on disposal, classified under cost of sales. There's this impairment of plant. Remember already, depreciation of plant and equipment is under the cost of sales. So impairment, obvious, again, will be under this, because impairment is, again, a loss in value of that asset, of the plant. Is there an expense I have not recorded? Any expense, any expense. So additional information or expenses are recorded. Then you always check, go to the trial balance, check if there's another expense which we have not classified. Nothing. What you do, add this sum. So this is 514. 345 plus 17.5. What are we getting? 362.5. 1732 plus 24 plus 5 plus 4. 1765. So, yeah. I think you are making notes. Those were the workings. Those were the workings. They don't earn you any mark. So what earns you marks is what I will be doing now. But workings will aid you. Under published, you have to do them. Maybe the one which doesn't require workings is the statement of financial position and partial statement of changes in equity. But income statement, you have to do the workings. But for the other, maybe few workings are required. So on this case, we have dollar limited. So they need, nowadays they call it statement of profit and loss. Statement of profit or not and. Statement of profit or loss and other comprehensive incomes. So that is for the year. For the year ended 31st December 2014. Shillings in million. We start from the revenue, or we call it sales, or we call it turnover. So sales, revenue 2648. So that's cost of sales. So the working we did, this one, 1765. You get your gross profit, add incomes. Add incomes, I can see these incomes like investment income. So investment income from the, is it investment income or? So let me start with the one in the trial balance, rental income. So the rental income is 48. And there was increase in investment property. So it was from 548 to 586, which if you can check note 6, after they did a valuation, the market value of the investment property by the end of the year was stated at 586. 586 minus the 548, that is 38. So After incomes, we raise expenses. So expenses, we talk about admin. So that is 362.5. This one, then distribution cost. So 540. So we get the profit before what? Interest and tax. That is where now we introduce finance cost, the interest. And I think I'm not moving with high speed. You are getting what I'm doing. Sawa sawa. So the finance cost is, anyway, for the one who had done this so that to avoid a lot of confusion, 2648 minus 1765. This is 883, plus 48 plus 38 minus 362.5 minus 514. This is 92.5. And finance cost now, you check the interest. We have a loan, so 4% loan. So 4% on the value of the loan is 4% of 150. 6. So 4% on the loan. So up to this point, we have the profit before. Before tax. So the profit before tax is P minus 86.5. Then income tax, you were told there was a current tax of 20 and a deferred tax of 7. That is additional information number 3. The income tax liability in the year was estimated to be 20. Deferred tax is provided at 7, so we have 27. So we minus that, 27 from 86.5 minus answer. With profit after tax. Profit after tax of 59.5. Then we add other comprehensive incomes. So there was a revaluation gain on land and buildings. It was 400 and something, 400. It was 400 and what?
484.
Total comprehensive income. 543.5. Start okay, start okay, start okay. Haya, so
Hi, Mwalimu.
yes, go ahead.
Where do we take loss on revaluation? In case we have a loss on revaluation, how do we record it?
You
Do
minus
we
them.
record it? You minus. You don't classify it like under the functions up there.
No.
Okay.
So the DORA. Statement of changes in equity. For the year ended 31st December 2014. So some of the equity components we have is all about ordinary share capital. So you take from the trial balance. So the equity items you have, we have ordinary share capital. I can write in short. So we have the ordinary share capital. We have the share premium. I can see that one from the trial balance. We have the general reserve. We have the retained earnings. There was a revaluation reserve in the additional information for land and building. And we have the total. So balances as per the trial balance. So the balances as per the trial balance. For ordinary share capital is 100. $244, $570, $349. Evaluation we don't have in the trial balance. Then the next thing you check is issue of shares. You can have issue of shares at par. This one is not there. Or at premium. So at premium, it affects share premium. At par affects ordinary share capital. Then after that, there was bonus issue. So 33, it increases the capital because it shares the issue, capitalizing its general reserve. Remember that this one is all about shares the issue for free. Where they got this money to finance this bonus was from where? That is why they said capitalizing its general reserve. So we minus from this one. So this one will be 0. I think for the others, you are giving me the totals. We get the totals here. Then other than that, we can talk about profit for the year. So profit for the year goes to the retained earnings. So this one, 59.5. and to the total. Then you can have dividend paid, but dividends are paid out of the profit. So you deduct there. So dividends paid, they said interim dividends paid 6. Nothing is remaining, nothing. So here we have the balances carried down to the statement of financial position, 133, 244. So 570 minus 33, 537, 349 plus 59.5 minus 6, 402.5. There was revaluation gain, by the way, which I have not included. Revaluation gain, which goes to this column. It was 484. So 100 plus 244 plus 570 plus 349, 1263 plus 59.5 minus 6 plus 484, 1800.5. That is the statement of changes in equity. That is how it looks like. We go to the statement of financial position. But for us to do statements of financial position, we have to do the property, plant, and equipment, the working. Property, plant, and equipment. So there was land and buildings. Land was revalued to 100. What about building? 700. But it was depreciated over 40 years. So the depreciation for that current year is 17.5. So we need to minus. So 700 minus answer, 682.5. After that, there was another asset, which is in note 4, or which is there in the trial balance, which is plant and equipment. Already we determined the net book value. You remember we got 92. It's a working we did. There's no another asset because we have run and buildings, plant and equipment, nothing else. Or there's another asset, nothing. Ah, yeah. So 100 plus 682.5 plus 92, 874.5. So this is the block figure for the plant and for the property, plant and equipment. So now we can present that statement, DORA limited, statement of financial position, asset, 31st December 2014. So we have shillings in millions. Shillings in millions. So we start from non-current assets. So PP, property, plant and equipment, 874.5. Another intangible assets, there's investment property, which must be shown independently. But remember this one, by the end of the year, it was valued at what? According to note 6, it was valued at 586. Current assets, we start from inventory, the closing one, where we did our working. Working number 1, we got 381. Then you go to the receivables, the debtors balances. Trade receivables. That is from the trial balance 545. Is there any cash, bank balance, cash and cash equivalent? So the cash and cash equivalents is 28. Prepayment was not there. Another asset, another asset, another asset. None. There's nothing. So total assets. So we go to equity and liabilities. So for equity, we have this. We copy from the statement of changes in equity. So the equity, we have the ordinary share capital. $133. Share premium, $244. General reserve. I'm copying these balances carried down. 537. Retained earnings, 402.5. Revaluation reserve, 484. Total equity, you are told is 18,000.5. Liabilities. Non-current liabilities, we have the 4% loan. So the 4% loan is, it's stated at what? 150. There was deferred tax. Deferred tax from additional information number 3. Remember, the deferred tax is all about our future tax obligations. The current tax payable in the future. This is 7. That is from additional information number 3. Then current liabilities. Trade payables. From the trial balance, 434. And we have the current tax tax payable in the current year under consideration, that is according to note 3. It was estimated at 20 million. 20 million. So there's a loan, of which this loan, remember that the loan was remember the loan, it's a 4% loan, this one. So the interest we got is 4% of the loan, 150. The interest on this is an expense. The total 6 is an expense. But if you check the first item, there's loan interest paid. That is the second item in the trial balance, loan interest paid of 3. Out of the 6, 3 has been paid. So meaning that the one which accrue is 3. So accrued interest on the loan is 3. Total equity and liabilities. Let's balance this question. We check if we are okay. It's not a must, it balances, but it's very okay if it balances. You have to do that. So this 24. You are getting, who is getting 24, 24.5?
Yeah, I'm getting 2414.5.
24.14,
Yes.
So there's somewhere I've missed. Yeah, so this one is 2414.5. What about assets?
Total equity and liability is the same.
This one is also the same.
Yeah.
Yes, it is balancing.
So that is okay. That is how you are supposed to do this. But in your exam, never waste your time to balance the equation. It can never do that. Maybe it cannot balance. You will waste your time. But like now, in this question, if we were to mark, you can score again. Many entries here are free. Like now, this one is for free. This one, at least this one, no, it's not for free. This one is free. This one is free. This one you have to compute. Muting is not hard, so you give me another time to mute you. That is so. Even this one is direct. Here we have a lot of items which are direct. So it's all about understanding how these statements are done and how can you be able to get some of the entries without struggling a lot. Sio ni sawa. So what's the time? What's the time? How do we make it? It's 9:30. I don't want to do another question. We can stop there for today. We meet tomorrow for another question, so that we can be able to say that you are understanding, or you are okay with this topic. So tomorrow another question. I will share the question to the group later tomorrow. It's that okay? Any question? Before I end the class, maybe anybody taking the notes, you can check. Anybody who has a concern? Sawa. Have a good night. See you tomorrow. Same place, same time. Sawa sawa.